Hey folks, Dan Frio here with your Friday update. So grab your cup of coffee. We're going to get through this in 8 minutes or less, I promise you. Because when I go over 10 minutes, I lose everybody. So I'm going to recap what events are taking place right now, kind of what happened yesterday, what that is, and what my thoughts are for the rest of this day and maybe the next week or two to come. So please be cautious of that. I'm not an economic advisor. I'm not a stockbroker. So if I'm going over some stocks and things like that, please don't use this as trading platforms. I'm just doing this for entertainment and educational values for you guys because the schools are failing us, folks. So what you're seeing right now is basically the bond market. Everything is just zero. Look, zero, and 0.02 change. So basically no changes. Well, what in the world's going on? Well, we had some great news today. So let's recap what just came in today. The GDP came in yesterday, and it was less than what they expected for the last few months. Jobless claims are starting to go up. People are losing their jobs. But right here, this is the number one tool that the Federal Reserve uses when they're checking on inflation. What is the PCE? Well, basically, the PCE is this. The Core Personal Consumption Expenditure Index measures the change in prices of goods and services purchased by consumers for the purpose of consumption, excluding food and energy. Unlike the fixed weighted CPI, the PCI is a chain weighted, and this adjustments to changes in consumer behaviors. Sorry, it's Friday. I'm antsy. The PCE is the Federal Reserve's preferred inflation measure. So let's look at the number, what it came in at. Well, the previous number came in at 0.5, so 0.5 is up in this cost index. The expectations were for 0.4 for it to come down a little bit. It came down a lot more than that. It came, well, not a lot more, but it came down to 0.3. So we are going in a good direction at this point. If you go over through here, you're going to see that personal income is going up, but you can see the PCE expenditure increased 27.9.2%. So not as robust as everybody thought. So what we're seeing right now is inflation is coming down, folks. And yesterday and this week, what we saw is house prices are stabilizing. Some areas are going down. Nobody's crashing other than there's about 2 or 3 areas out in California getting hit fairly hard. So be careful of that. And then, but most of the inflation numbers look good right now. The jobs reports are coming in that more and more people are getting let go. So that's giving us a hint of, maybe a recession on the horizon, as well as the yield curve is actually showing us a recession is coming soon as well. And most of the economists are expecting that. So let's go over to Wall Street and see how Wall Street's getting affected by all this stuff. You can see on your screen right now, the S&P is up 0.5%. Dow Jones is up 0.5%. NASDAQ is really kicking in up 0.6%, up 76 points. And the Russell is over 1% up. We do have crude oil right here jumping. It still drives me nuts. I don't have what can my rant of the day be? I'll think about that. So you can see right through here, stocks open higher in the first quarter, wraps up a lot of earnings. If you're in tech for the first quarter, you probably made about 15-20% on your money. If you're in anything else, you probably lost money. The Fed's preferred inflation gauge shows inflation is cooling. So that's what we're really focused in on. You go over to the Bitcoin. Bitcoin is up $17.06. Nothing really going there. This news, I didn't know if this news would be good or bad for Bitcoin, but I don't think any news really does anything. This thing is just bounces all over the board. So let's go over to the market watch. Let's look at those stocks that we had in our radar, the banking stocks. Why? Because I wanted to show to everybody that all the banks got hammered when we had 2 or 3 banks fail. They all got hammered, and then a lot of them are starting to come back. So what you're seeing on your screen right now is the trades. We got UBS up 2.7%. Guys, these are just today. These are returns. Many people would be good with a 2.76 return in 3, 4, 5, 6 months. This is a day. Okay, so these are the banking stocks. So you go to UBS, it's up 2.7% today. First Republic is up 1.5% today. Look at this where it was. It was at $171 a share. Now it's at 13. Okay, I'm going to check out the yields there. We have Credit Suisse. It's up almost 2%. Goldman Sachs and JP Morgan. These are the 2 huge entities that are involved in some of the talks with some of these banks. They're up just a little bit, but they really got thrown out with the bathwater too. And then you go down through here. We got mild changes through these. This is the XLF. XLF is an ETF. When you see this ETF, what those means are those are baskets of stocks in the financial sector. So the regional ETF has basically U.S. regional banks in there. And then the SPDR has major companies like JP Morgan, Chase, Citibank, Schwab, and things like that in that. So the banking stocks are recovering. So with this news that's out today, what's going on with the bond market, especially mortgage-backed securities? Let's refresh this and see a good gauge of it. It's down 3. I expected this to really rally today, but there's a lot of illiquidity in the markets because a lot of people are kind of leery of treasuries, they're leery of the stock market, but more people right now are fleeing back to some risk. And what I mean by that is people are pulling out of bonds and out of some of those secured investments because of some of the things that happen with the treasuries and things like that with the banks. So a lot of people are pulling their monies out of those fleet of safety tools like bonds and moving back into the stock market. And there is a ton of mortgage-backed securities and other bond offerings on Wall Street. So it's a little illiquid right now. What I mean is there's too much supply for the demand. So we're not really seeing a big move in this, but if it were a normal market, this would be a big day for rates, meaning they would come in really good. Where are rates coming in right now? Now, guys, these are not my rates. These are rates published by Mortgage News Daily on a daily basis. So these are the top 6 products people use when they're getting a mortgage, if it's a refinance, to buy a house or whatever. This isn't going to be your rate. Okay, so the terms on to predict what these terms are, what created this rate? Well, I keep trying to figure that out, and I'm having a hard time doing that. So what we want to do is look at the trends. So yesterday we saw the average 30-year fixed rate go down 0.02, nothing. Again, across the board. So basically it was unchanged or down just a hair. Guys, this is normal. So we're getting back to normalcy. We just need these rates to come down a little bit more because of the illiquidity. That's what's keeping these rates up right now. But I'm expecting the rates to be in the low 6s or high 5s here within the next month or so. And then I'm also anticipating, what is the Federal Reserve going to do at the next meeting? The bond markets and the futures markets are telling us there might be another quarter bump in rates coming in the next meeting or maybe the June meeting. So only time's going to tell, but we can monitor that on a daily basis. So that is it for today, guys. I will not be posting a live event today. I didn't do it yesterday. I'm a little short staffed today, so I'm taking phone calls. So if you set up a consultation with us to review if you can qualify for a house, so you watch our videos and you're like, hey, I really would like to buy a house, or what do I do? What's step 1? Schedule a consultation down below. We do these all day long. I had one gentleman just come in, one of the sales guys, and he's like, I need a break. I need the weekend to come. I had 21 consultations yesterday. That's just one of my guys. So I started taking some of the calls. So you might even be privy to talk to me if you say schedule an appointment. So thanks for watching, guys. If you find value in the channel, please, all I ask you to do is give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Take care. Have a fantastic weekend, and I'll see you guys on Monday. Bye-bye.